You're either already selling final expense insurance or you're getting ready to start. So today I'm going to share a few tips designed to either increase your sales or help you get your final expense career off to a profitable start, like right from the get-go. And yes, a thumbs up would be appreciated. We do suggest subscribing if you're new to the channel. We're putting out life insurance and or Medicare sales content and final expense sales training videos just like this all the time. Tip number one, do not expect to have a profitable career working aged leads, leads that have been recycled over and over, or buying any type of lead from a lead vendor. First off, most aged leads and telemarketed leads are just crap. And if you're buying leads from like an offshore call center, you're most likely working a lead that is not TCPA compliant, and it's probably illegal, and you can get in a lot of trouble and end up spending a lot of money if you get busted working that type of lead. Guys, you have to trust me on this. The last thing that you're gonna want is to fall into some like shady attorney's honey trap and get sued for thousands of dollars because you trusted an overseas call center or a US call center that works with a overseas call center. And guys, stick around till the end of the video. I'm gonna show you how to get both the thank you note that I mail out to every single client that I sell and the warning page, which is what you're gonna wanna put with your new client's policy. And what this thing does is it's the verbiage in it is designed to scare away any type of agent that might, come into that client's house and attempt to replace the policy that you sold. When it comes to lead vendors, no matter what the quality of the leads is advertised as, there is no guarantees. And I hate to say it, guys, but paying 25 or 30 bucks or more for a lead is most likely just a huge fail, especially if you're selling over the phone. Let me put it that way, for sure. My suggestion is to just find an agency where they've got a small group of agents who are all doing really well using their leads platform. Just look, here's the thing. Don't fall into the trap of a multi-level marketing insurance agency. They're going to have thousands and thousands and thousands, potentially tens of thousands of agents, and this small group that they're going to highlight that are doing well. And then, of course, when things don't work out, they won't release you. There's a few good agencies that do have an ads funnel system for their agents. So just do your research, do your due diligence. You can always reach out to me. That's exactly what we do with our group. Thing is, if an agent wants 20 appointments per day, I make sure they get it. Simple as that. If they say, Doug, no, I want like 30 appointments a day, they're a hot top tier closer, we can make that happen. It's pretty easy actually for us. Tip number two, if you expect to have like any level of success, and let me put it that way, you're gonna need money to do that. Don't expect to earn like $100,000 per year if you don't have at least a couple $1,000s available on your credit card. Thing is, if you don't have the money to invest into your insurance business, you probably shouldn't even be an independent agent. Unfortunately, a lot of people are recruited into this industry under these false pretenses or for like one reason or another. And, they just don't realize that the life insurance sales business needs to be treated like any business if you expect to earn the big bucks. Look, if you're opening up like a storefront, a coffee shop, an Amazon business, you need money. The wonderful thing about life insurance or final expense sales is that it doesn't need to be thousands and thousands of dollars. You don't need 20 or 30 or $50,000 to do that. It's literally like $2,000. And I know we set up an ads funnel for our independent agents. We do it for like a one-time fee of $1,200. And it's the type of funnel that you could spend $5,000, $10,000 having someone else set it up and it not even work. Like I said, we're not the only ones doing this for our agents, but I'm pretty sure we are the best. And no, we don't do it for outside agents, which kind of comes back to that first tip of thinking, about lead vendors that I was talking about. From the perspective of an agency owner who generates high intent leads and appointments for his agents, if you can generate high quality leads, why would you sell them to the public? Think about it. When you can just get them to your own agents at cost and make a lot more money and not create your own competition. That's kind of common sense. So how do these lead vendors do it? Why do they do it? They generally make one sale to each agent who never comes back for a second batch. Thing is, most leads from lead vendors are way overpriced and not even close to having like a decent return on investment. By the time the lead is sold to the agent at twice or 3 times the cost that it took to generate it. Think about it. There's no way a lead vendor is going to sell you leads without at least doubling, or tripling the cost. They got to make the money. Like I said, they're probably only going to sell it to an agent one time. That's it. Most agents don't come back a second time with lead vendors. And I know this because I sold leads to the public years and years ago, and I had a pretty decent mediocre lead, and it just doesn't matter how good the leads are. Once you jack up the price to make the profit, the ROI just isn't there. Not for most agents, especially the type of agent who depends on buying leads from a lead vendor. And that also has a lot to do with mindset, which leads us to tip number 3. Make sure you have a few good carriers to sell through and don't spread the business too thin. That's just a bad idea. I see more and more agents who get way into debt because they write business through 8 different life insurance carriers because the agent is over concerned with getting people approved, with certain products who probably shouldn't be able to get approved by, I hate to say it, by any carriers. No, idealistically, you do not want to be stuck with one carrier as a captive agent either. Absolutely not. But, to me, writing most of your business with more than 3 or 4 carriers is most likely going to end up with you just being in debt and getting a vector, and it just will kind of destroy your career. And yeah, guys, as a broker, I absolutely believe it is very important to give the client a competitively priced product. But in most sales scenarios, fighting to give the client the best price is actually a fail for several reasons. For final expense telesales, I like American Amicable for the main carrier. I like Mutual of Omaha as this price buster carrier, but not a main carrier. You don't want to use them as a main carrier. Only when you're looking at maybe a replacement scenario, you need a price that's going to battle the existing policy price. I like GTL for their graded and almost guarantee issue product, Guarantee Trust Life. Thing about GTL I like is that you can put most clients that would normally go to a GI carrier with their product. And yeah, guys, I still love Royal Neighbors and SBLI, Savings Bank Mutual Life Insurance, but I don't recommend SBLI for one main reason. I mean, you want to try to avoid them. They've got this thing where they give a full charge back to the agent if the client doesn't make a third payment. So, you sell the client, right? Most carriers, the client makes 1 or 2 payments. They advance you 9 months. You've got to give back, if they make 2 payments, you got to give back that 7-month difference. With SBLI, if they only make up to 2 payments, you got to give back all 9 months, full charge back. And with Royal Neighbors, they're more of a niche product. So they're a product that comes in handy. I like them because it's such a female-based company, and they've got all these extra little benefits that come with being a policy owner, or excuse me, it's actually a certificate owner. They're really only good for specific niches. The idea is, now let's say you sell final expense for maybe a couple of months. Then you realize you don't like it. And instead of putting new business with those carriers, you don't. And like most agents, you only see business falling off the books. Not good. Which leads you to being in debt. And if you already spent the advance commissions, and I hate to say it, most agents do. You're not supposed to. When you get an advance money, you're supposed to put 25% of it in a side account. But most agents, they won't do that. They'll get into debt. They'll get vectored. They get dropped by the upline, right? Now you're on your own, or by the carrier, and now you're stuck. You're kind of you're out of the business. You're actually leaving the industry. And of course, now that you've rolled up debt to your upline, they're going to be pretty angry, and they're not going to make your life easy. Trust me, you're going to end up in a courtroom if they know what they're doing. For a copy of both the thank you note and the warning page that I mentioned earlier at the beginning of the video, just email me at doug@ufesonline.com for more information on working with us and using our preset calendar appointments remote sales platform. Just shoot me an email at that same address. As always, when you put the needs of your clients first, everything else will usually fall right into place. Now, get on that headset, and whatever happens, just make sure that you do something good for someone else today. Happy hunting.